Today, we're talking about Chevron's first quarter earnings report and dissecting everything you need to know about the company. Let's kick things off with the headline numbers. Chevron reported adjusted earnings per share of $2.93, exceeding analysts' expectations by a hair. That's 3 cents to be precise. This is good news for investors. However, revenue came in at $48.72 billion, missing estimates by $1.99 billion. Now, this might seem concerning, but there's a key reason behind the lower revenue. While overall production soared 12% year over year, a significant drop in natural gas prices compared to last year impacted the top line. The real champion of this quarter for Chevron is undoubtedly production. We saw a massive 35% increase in US output, driven by two key factors. First, the acquisition of PDC Energy significantly boosted their domestic capabilities. And second, their strong performance was boosted in key basins like the Permian and DJ basins in the USA and I won't try to pronounce this in Kazakhstan. This surge in US production helped offset a slight dip in international production, making it a clear win for Chevron. Now, let's shift gears and address the ongoing saga, the proposed merger with Hess. During the earnings call, Chevron reiterated its confidence that the deal will close. They expect to certify substantial compliance with the FTC's requirements in the coming weeks, which is a significant step forward. Just to remind everyone, Chevron announced they will acquire Hess, another energy company, for $53 billion in the last fall. God, these corporations are spending $50 billion like I'm buying cheese on Monday. Just to remind everyone, there is still an arbitration with ExxonMobil regarding a preemption right, but Chevron believes they'll prevail. They anticipate closing the transaction shortly after the arbitration is resolved. Next, what is most interesting for you and me. Chevron remains committed to rewarding shareholders. They returned a solid $6 billion in the first quarter, making the 8th consecutive quarter with cash returns exceeding a remarkable $5 billion. Looking at the investment side, Chevron is putting its money where its mouth is regarding future growth. Capital spending rose to $4.1 billion compared to $3 billion last quarter. This increase shows their dedication to upstream projects, including integration of the newly acquired PDC Energy assets. The Permian Basin continues to be a golden goose for Chevron. Production exceeded expectations and they're implementing impressive efficiency improvements. This focus on optimization ensures they continue to get the most out of the basin. Beyond the Permian, they announced a final investment decision to expand midstream infrastructure in Israel's Tamar gas field, boosting production capacity. This move strengthens their position in the natural gas market. But Chevron isn't just about traditional oil and gas. They're making significant strides in the energy transition. They recently launched their third energy transition fund focused on low-carbon technologies. This demonstrates their commitment to developing sustainable solutions for the future. Additionally, they finalized investments in renewable fuels and hydrogen projects, showcasing their long-term approach to the energy landscape. Now, how will that work in the long term, bearing in mind that they primarily make money from carbon-based fuel? We'll see. It's a bit like in the tobacco industry where they say they're trying to reduce smokers. In some way, I can understand why they do it, and it is a smart business move to move with the trend, not against it. But on the other hand, how profitable and serious will that be, especially compared to companies that focus solely on non-carbon-based energy? It remains to be seen. So, what is the takeaway? Chevron's first quarter was a story of resilience and strategic growth. Strong production growth, continued focus on shareholder returns, and investments in the future through the Permian Basin, renewable fuels, and hydrogen position them well for the long term. While some headwinds exist, like the volatile natural gas market, Chevron's diversified portfolio and commitment to innovation position them to weather these challenges. Chevron's Q1 report paints a picture of a company firing on multiple cylinders. Production growth, a focus on shareholder returns, and strategic investments in the energy transition solidify their position as a leader in the industry. I really like the company, and by the way, if you want to see more companies I like, check my top 4 stocks and ETFs report for the current economic and geopolitical environment we're in. It will always be up to date regardless of when you are watching this, because I'm constantly updating it. You can check the link in the description. So, if you're a Chevron investor, this report should provide some reassurance. The company is demonstrating a commitment to both financial performance and keeping an eye on the future trends. Of course, the energy sector is always subject to change. Fluctuations in commodity prices and geopolitical events can all impact the industry. However, Chevron's diversified portfolio, strong financial position, and commitment to innovation position them well to navigate these challenges and deliver long-term value to shareholders, in my opinion. Before you go, click on this video that should have appeared on your screen to continue with your investing education. Check important disclaimers in the description, and I will see you in the next one.